Funny thing is that I get so many requests to interview, prop firm owners, right, and the owners of the prop firms, and I'm always like, well, here we are. This is the perfect opportunity. It's something a bit different. I'm not doing a live. This will be my first live podcast, if you will, in front of an audience. It should be really, really good. But we'll go straight into it, and we're going to start with a very simple question. Like Alpha Capital, we actually ended up having a discussion a couple of days, I think it was like a week ago.
Yeah.
I didn't realize. I thought Alpha, like Alpha male, Alpha this. But it's actually much deeper than that. I'm much more connected to trading.
Yeah.
Where does the name come from?
So Alpha, the name, why we chose Alpha, the name Alpha is the investing terminology is to beat the market, to beat the benchmark, which is why we chose Alpha, because we're looking for people that are better than the average crowd.
And also, it sounds quite cool as well.
And it does sound good. But that's what it was for, really. What we're looking for is the people that can achieve alpha, that can beat the market, that can pass these challenges and be profitable. So that's why Alpha, and it does sound cool. So it's a good brand that we built around it.
What is it for you guys to run this firm and to build it in the way that you have? What is it? What is your vision? What is your goal?
The vision for... We've always thought much broader than just Alpha Capital Group prop. And it's not that we're trying to do too many things at once. It's that one thing that's always bode us very well over the past 2.5 years is the infrastructure that we've built, which one of those is ACG Markets, regulated Seychelles broker. And what that's brought to us and Alpha Capital Group is stability. During times when other firms were facing difficulties through 24-hour notice, you're losing everyone in this audience most likely is their favorite platform. 24-hour notice, company loses it. So our vision has always been to invest in the infrastructure, but with that comes opportunities to grow beyond just FX prop.
Yeah, I think we've done that quite early as well. So I think we achieved a lot of our goals a bit quicker than even we initially anticipated. And then sometimes you don't always have to have a 3-month or 6-month goal. We're very happy with the way the business is running now, and sometimes you've got to kind of just double down on what you're currently doing. If customers are happy and the flow of business is good, then just carry on what you're doing. And that's kind of what we are at the moment. Obviously, we're going to now move into futures, which has always been a plan of ours for probably the last 6 months now, isn't it? And Ben will elaborate a bit further on that when he's up here. But all in all, we have maybe achieved a little bit more than we anticipated, a little bit quicker, and now it's a case of just keeping that going.
Definitely. And what does it mean to you guys to host an event like this? Because a lot of firms aren't getting around their traders. And how's it been in terms of like actually meeting some of your traders and hearing their feedback?
Incredible. And no business is a business without its customers, but more so in the industry that we're in. We've had a few people on stage referring to it as well. It's a lonely, difficult, challenging market and career to pursue. Most of people in this room, like myself, before I started Alpha Capital, I had a 9-to-5 working in finance, but I traded as well. And when I was trading, I was at home in the evenings on my own. If I won, I won. Great. If I lost, I lost. It's all on me. There's no one else to share it with. It's a community and bringing people together that are all on the same path, all have the same goals and aspirations. Slightly different journeys, but the end goal is there or thereabouts the same. So
it is, and
collective.
What's been quite interesting, just following on from what George was saying, I was just speaking to Falak there, is a lot of people have turned up on their own today as well.
Yeah.
And that's what I've noticed, and I noticed over the lunch period now, people are beginning to sort of warm up, loosen up a bit, have conversations with each other, but you'd thought at an event like this, like, well, if I'm going to go, I've got to take a pal with me, as an example, but it's been interesting to see how many people have actually just turned up on their own, and I think that's also been quite a good thing to see as well.
I think that also, that just shows how lonely it is in this market, because you could be in a friendship group, like my friendship group outside of work, there is no one that trades financial markets in my actual, personal friendship group. So, and if I was in the position that you guys are in and I'm sitting in that chair there and, I'm a customer rather than the owner, and no one in my friendship group trades, then who do I go to if I've had an extremely difficult day or a bad day, or I've just fucked up, or I've made a big mistake which I knew I shouldn't have done, and it's all on myself, but you've got no one to share that with. You've got no one that relates to the problem that you're currently dealing with. So, to see people coming on their own, again, it just reiterates for everyone in this room, like even more important now to, make connections with people here that you might relate to, exchange numbers, start a group WhatsApp or a Discord or a Telegram, just connect with each other because you're all on the exact same journey. You're all heading for the exact same goal. Yes, you've got different, routes to get to that end goal, but everyone's going to have a very similar journey in this room, so it's good to...
But always make your own decisions, trading decisions as well,
Yes.
otherwise you'll end up blaming each other on the WhatsApp group. So.
Yeah, don't listen to someone that tell you to short euro. But yeah.
No, definitely. No, I love that. And one thing that's always stood out to me about Alpha is that you're very community driven. Even outside of events, you're very active when it comes to your community. A lot of the time when I've spoken and sort of started to get involved, I'm like, okay, I want to try and speak to some traders. And you're not just saying, oh, there's a trader here who had an X payout. You're saying this guy's name and this is his story. And that, I find that quite unique. What is that? What is the mentality of trying to be around the community? Has that always been the case?
I think you always see built for traders by traders, and sometimes the slogan's thrown around a bit nonchalant, but we generally are. I was in your position, 4 or 5 years ago, 3 or 4 years ago. Drew, you own a brokers, you're a trader at heart, you still trade every day, day in, day out. So we've all been in your shoes. So when we see these success stories of people that, are that 5% of people that are amazing, it stands out. We notice it, we see it, we reach out, we thank them, we congratulate them. That personal touch, I think, goes a long way, and it's also rewarding for us. Otherwise,
it is. Like on the point that you make about community, we run our first ever event. It's probably going back nearly 12, maybe like 18 months ago. That was before we knew you good sell for us. But there's people in this room that I've just spoken to there that are recognised from that event, and I thought that was nice. Like, I haven't seen these guys for 18 months, and they're back at the event today. So that was also quite nice to see.
No, definitely. And in terms of the future of what you're trying to, we've seen the industry change drastically over the last 6 months, and we've seen a lot of firms leave, a lot of firms even enter at this stage too. But like, what is the vision for Alpha? What are you building? What is your thought process of building that strong foundation?
I would say to take over more market share. There's market share available at the moment. Running a prop firm is difficult business. You have to get your pricing point right. Okay, anyone can set up a prop firm and undercut everyone, be the cheapest prop firm. But let me tell you one thing: in 3 months' time, you're going to have problems. Okay, so it's taken us a while to find that sweet spot, I would say. We're very honest, we're very integral, we will always follow up on what we say. We don't pull the wool over people's eyes, and I think now we've built our brand by being that way. I think that now there is a bigger market share to go and attack, and we're all also very ambitious, just like all you guys are with your own trading books or other businesses that you might run on a Monday to Friday basis. We want to go and attack more of the market and double down on it and be more successful.
I think a strength that we've always had up until this point as well is we've never rushed anything. We've never cut a corner. We've never jumped the gun. So in our first, we're 2.5, nearly 3 years old at this point. There's a lot of companies that launched after us, saw a lot of growth a lot faster and surpassed us. But some of those are now not here. Some of those are still larger, but a lot more unstable. And we've always stuck to the path of create the infrastructure, create the stability, create the foundations, and over time we will grow. And we've continued to see that growth, and it's paid its dividends.
Sorry to jump over you, but just to echo what he said, there was a time when we first started the business, started making some money. We could have drew that money, right? But we made sure that we went back, invested in our technology, make it a better customer experience. It would have been very easy just to take that money into our own bank accounts. We didn't touch a penny of it. It all got reinvested at that stage, and looking back, I'm grateful we did that.
Yeah.
Definitely. And Drew, I know you need to go in a moment, but just a message for the audience. I've always sort of noted how direct you are in terms of how you speak about trading. Like, what advice would you give them for them to sort of get to the positions that they're looking to do, that consistency stage?
I would say, and I've had this chat with a couple of people today, only focus on a couple of instruments. So, for example, when I was trading, I only traded the FTSE 100. What I've been surprised at today is, what nobody's mentioned is, much industry trading. There's a lot of talk about FX today, but I know a lot of you guys are trading indices out there, and I think one thing that nobody's really mentioned is get to understand the constituents of the index. For example, the 100 companies that make up the FTSE 100 if you're trading the FTSE, the 30 or 40 companies that make up the DAX if you trade in the DAX. Alliance makes up 8% of the DAX. Nobody knows that. They can blow out on a profit warning. Also, 300 points offside on the index. You've got Shell that make up 10% of the FTSE 100. You put AstraZeneca in there, 9%. All of a sudden, you've got 20% of the market wrapped up in 2 stocks. Find out what they're doing and learn to understand the constituents that make up the underlying asset that you're actually trading. Learn them, be aware of them, be aware when their news is coming out, and I think that will just help you in the long run.
Love that, love that. We're going to give some questions to the audience very quickly. If anyone does have any questions, just raise your hand. There's one at the back there. Our good friend. Go for a run, Josh.
Chop, chop, Joshy. Go on.
I know. I want to put a bet on if it's going to be an AI question or not.
AI.
Is it
That's
going to be
going
an
to go
AI
like
question?
that.
Yeah, I'm not the man.
This
for
time it
AI.
won't be AI. So as a retailer, you know, like we are working in this industry for prop firms. So majority of the people sitting on these chairs, they would agree with me that constantly we are in fear that, okay, the prop firm we are working with, it can collapse anytime.
Yeah.
So how much we should feel secure with you? Why Alpha Capital? Why Alpha Capital's future is secure? What's your business model on which you are confident that, okay, investing with you, it's not only financial investment, it's not only fee we are paying you, but that's the intellectual investment as well. We are working for you.
I think that's the most important thing for you, every single one of you in this chair now, that it doesn't apply just to us either. Obviously, I know you're all, you know, if you're at our event, you're probably trading us, you know about us, but if you do trade with others, and just even when you do look at us, you have to look at why Alpha Capital? What makes Alpha Capital different? And you need to look for things that are going to ensure you stability and longevity. Because custom platforms, brokerages, licenses, in-house technology, we have removed all reliance on third parties that, without our say-so, can have an impact on our business and directly impact you. Example that you've all seen, MT5, if we had Purple trading and tomorrow Purple trading said no, at that point, next day, every single one of you in this room is affected, and I can't control that decision that's Purple trading, enforcing that on us. So in our 2.5 years, we said it a moment ago, that focusing on the foundations and the infrastructure ensures we have a stable product and environment to offer our product without any outside influence making an impact that we say no to, but we can't stop them. And then it impacts yourself.
It's a good question that you asked, though, because we're not working within regulated financial services. There's no financial services compensation scheme, no ombudsman service that you can refer to. Really, all you'd be is losing your challenge money, but it's still money, right? So I think you just have to kind of trust in our business experience. We always make sure that we're very, very liquid. We have enough capital adequacy. That's just drawn on experience and what I've had to learn over the years as well. And that's about that, really.
The business model. So again, looking at the business model, you have to look at you're looking for stability and longevity, right? If we have the easiest challenges, the lowest prices, the least strict amount of rules, it's not that that's not a good thing, because of course that's a good thing for you, but then you have to then look at the prop firm that's offering that. Can they sustain that over a long period of time? We haven't changed anything in our model over the past 2.5 years, and as I'm sure if you've been with us for the past 2.5 years, there's not really been any bumps in our road. And the reason for that is because we offer a sustainable model, and we don't just rely purely on the fact that we assume every single one of you is going to fail over time on the funded stage. For 2.5 years, we've invested 7 figures and 2.5 years worth of time on the data monetization side, which we are very successful on. We can't go into exactly how we do that because we'd be sharing inside secrets, but it gives us an edge and it gives us something that we can rely on. And it's also why we have the infrastructure that we have. We have a regulated broker, ACG Markets. It's had a license for a while. And there's reasons behind why we have a company like that within our group that we use. It's not available for people to deposit on yet, but it's internal use that we use for good reason. We have tier 1 institutional liquidity providers that we face with our own cash, which is better to do so under a specific entity for that rather than just through purple trading 8 cap. There's not much you can do if you've got 8 cap accounts.
Perfect. Well, Drew, I know you need to go.
I'm going to get a substitution here for
That's
Ben.
it, yeah, we're going to get Ben Shafi onto the stage as well. Well, everyone, a round of applause for Drew and George.
Thank you very much.
Thank you, man. No worries. Take care.
How are we doing?
Ben, thank you for joining us. Thank you for joining. I know you're just waiting, eager to get onto stage there. Just to start off, just to follow up on what we were just talking about very quickly there, George. One thing I will sort of reflect on, as someone on the outside, if you will, was that you guys have actually been around for a while. It's not like a case where you've been here just for 12 months.
No.
But the reason why many people might assume that, though, is simply because you spent the time on the infrastructure, as you said. You spent the time on those platforms, on the in-house technology, and all of that infrastructure first, rather than just rushing to market, which a lot of people have done. And you know, they've made that mistake, and it shows.
Our first year was slow growth, like slow. We was watching everyone pop up and go triple, double, quadruple the size, and we, you know, and this is why I say it was important we never cut a corner, because we could have quite easily seen we could have tripled, quadrupled in size within a few months if we copied this, you know, what others were doing. But we stuck to our guns and we stuck to focusing on what was important, because yes, the first year was slow. We didn't, you know, we wasn't all the size that we are now, but it pays its dividends for the people that are in this audience to give you stability and longevity, which in turn is a win-win relationship, because if we can provide you stability and longevity, you guys are comfortable, you can trade without worry, and we'll grow. And off the back of that, it's a sustainable model for ourselves. It's a win-win situation. We offer a model that's profitable, that we can sustain, that's got longevity in it, and it's a win-win. If you cut corners, you sacrifice, you'll take a risk. For the sacrifice of quick growth, you sacrifice the sustainability, for instance. So yes, it might look good for a year, everything's sunshines and rainbows, but you hiccup and then, you know, it starts to unfold that it's not sustainable. And then for you guys are the ones that suffer. So hopefully you can see the way that we've set up, the way that we've always operated, and the infrastructure that we've invested in. We haven't changed for 2.5 years. The plan, we've only continued to invest and grow the infrastructure. So hopefully that gives you the comfort that you've chosen correctly. I'm sure you trade with others than just us, and as you should. But yeah.
I love that. And Ben, as someone who was is a consistent profitable trader, now COO correctly as Alpha Futures.
And was first a trader of Alpha Cap. That's how we hired Ben.
The first?
Yeah, he was a
Not the first, saying that's how they...
How's it?
not
the first, we got it.
Was a trader with Alpha Capital.
Yeah, exactly. And that's incredible. That kind of speaks to exactly what we talked about earlier, of actually getting to know the community.
Yeah.
And look where it leads to. And I think that's an incredible journey that you've started there, and it's going to be an incredible one to continue on with. But in terms of being the prop trader, you originally started in the CFD space with trading equities, right?
Yep, absolutely. So some of you might recognize me. I was fortunate enough to go on Riz's podcast. We got to meet 8 weeks ago now. This is my second time back in London. Great to be here again. But I started out as a indice-only trader. That's still actually what I trade now, all in futures now, because the accessibility issue we obviously have run into over the last year in the US. So I obviously transferred to futures. But with Alpha Capital last year in particular, I did a little bit over 60,000 payouts. That's how I kind of caught their eye, being like, who's this guy from the US? How did he find us? Okay, he's trading mostly NASDAQ. Did the trader interviews and all that, and luckily I caught George and Alex's eye in particular, and they're like, hey, we're thinking about launching futures. Being a US-based trader, are you interested in being involved? And I said, absolutely, yeah. And it's led me here now as COO of Alpha Futures, which bringing that consumer side was really George's focus, which I've enjoyed a ton because we have a good push back and forth, because of course I want everything super, super trader friendly. And you guys are talking about the sustainability piece. He's like, Ben, take it easy, right? Like we need some rules in place for our traders. But I know all the frustrations I had as a prop firm trader throughout the last 2.5 years now. There's some things I want to see us do better. There's some things I obviously have to understand. There's a give and take between the company and traders. So luckily they saw value in that. And that's how I ended up in the spot and I'm in here now. So No, you get, like, understand, these guys are watching all of you as traders, for better or worse. I know everybody here is probably for better, right? But that is how I caught their eye originally, was being a profitable trader on their platform the last year and a half.
And in terms of that switch that you've unfortunately had to make that switch to futures, which no doubt you've embraced anyway. But for a lot of people in this room, especially being in the UK, they have the beauty of I guess, having both options. But a lot of people I know from trading CFDs, when they look at futures or hear futures, and this is from my own perspective, as you already know, it's like, it seems like a Wild West, like something completely different, right? That it's going to take so long to learn. But what is the reality of making that switch?
Just before you do comment on that, because I know exactly what you're referring to, because sometimes you see the futures traders post in their trading setups or their charts or something, and it looks totally different because they'll have bid-ask footprints, they'll have heat maps, they'll have so many different types of flow, order flow. Like the depth of market is completely different to just 5 or 6 levels in CFDs. You can see all the orders from a centralized exchange. So you see that and it seems different, but you can attest to it. If you're trading US 30 CFD compared to the ES?
YM,
there you go. It's not that much different. You can just simplify it down to just a chart and trade it the same way. Obviously, I'll let you continue there. You're the futures expert, but it's...
Yeah, my point to Riz when we talked about that transition is if you are an indices trader, I think futures are an absolute no-brainer. The reason for that is it is centralized data, right? Now, Alpha Capital Group treats their traders extremely well. It's not as much of a worry here. CFD brokers out there can legitimately fill you at whatever they want. They could just make up that price if they really, really wanted to. Again, luckily here, why I was a consumer of Alpha Capital, it was not happening here. That's why I consistently traded with them. Their conditions were great, their fills were real, right? CFD brokers, if they really wanted to fill you at whatever they wanted on US 100, they can. Futures, that can't happen because it is all centralized data through the Chicago Mercantile Exchange, and that's where we offer all of our products on futures are through the CME group. And that's obviously on our website with all of our available assets. We are pulling all that data from the CME group. So that is the huge difference, is you are getting true, real market data in a centralized manner, which, funny thing is, you said, it seems like the Wild West of Forex traders. I mean, Planty will probably have my back on this. Futures traders view Forex that way, especially it being, me a little bit biased, right? US-based market and everything. That's the way the US kind of looks at Forex market, is that's the Wild West, right? So it is technically, a more secure asset to be trading. As far as the learning curve goes, though, if you're an index trader, it's really, really easy. Currencies can be a little bit tougher, but the same way you had to learn your lot sizes, you just have to learn your contract sizes. I'll just give a quick example. I don't want to go off on a tangent here, but like US 100, if you're trading one lot is just one, right? Like one share of the US 100. NQ is going to be 20x leverage essentially. So one NQ contract, you're getting access to essentially 20 NDX. So the leverage is there. That's the funny thing. The US kind of says they're against CFDs because of all the leverage, right? It's too much leverage for a trader to have. Meanwhile, one NQ contract is 20x leverage. So I think that's a little bit hypocrisy from the US regulation and everything there. But the main thing of why they're like, oh, it's safer is because it's centralized data.
Just to clarify that point, so with what you've alluded to there on the brokers, so you can pull up your trading view and it will have 15 different brokers quoting for euro dollar or cable or yen or something. They'll be the same, the mid will be the same, but the bid and ask will be slightly different, even if it's just half a pip or 0.1 of a pip. A slight difference. There'll be a slight difference in market depth, and that's because CFDs aren't centralized, whereas what Ben's saying there on futures is centralized. It's the same price for absolutely, if there was 100 futures brokers, the price is the same, the market depth is the same, the order book is the same, it's all centralized. So that's the main difference and why some people view that as safer, because you're getting fills not from the broker or market, it's just from the CME. It's the same that anyone gets that trades it.
Yeah, definitely. That's why a lot of people over in futures, you'll see them using level 2. And that's why you don't see it a lot in the FX space because of that, because you can't rely on that data as much.
Yep.
But one thing I'll say to yourself, Ben, obviously, is like, you've gone through the journey that most people in this room are currently going through or have achieved. And, you went through a very similar journey though, of like I remember you had the personal account, you would rack it up, do huge flips, but then end up right back towards that balance again. And you said that prop firms really helped you, to sort of change that around. What was it about the prop firms and what was it about your mentality in terms of trading them that helped you to sort of have that consistency and those regular payouts?
I loved being able to say, okay, my 100K account, right, it's going to cost me $497. I love that, like, okay, there is my price. Like Dan said, respecting the money. I respect that I just spent $500. Let's see how much money I can get that to return. Because on my personal account, it was like, okay, $2,000, $3,000 account. Sweet, flipped it to $8,000, $9,000, blew it all. I never felt like I was actually like making a purchase. And that's when I really started to adopt this. You hear personal traders say it all the time too, treat trading as a business. Totally agree. Anybody that can do that with personal money, don't change what you're doing. That is fantastic if you found a way to mentally get to that space. For me, I just kept growing the account, slipping back to nothing, and I couldn't get into that mindset that it truly was, I've spent this much, I'm gonna use my skill to return, money back to myself. The personal accounts, I just could not get in that mentality of truly treating trading like a business. Well, the prop firm industry is obviously a business. It forces you to treat it that way. And that's really, I shared my story on Riz's podcast, but I did just over 100,000 in payouts last year from all prop firms altogether. I used that money to help pay off over $130,000 worth of student debt, which you guys don't have that much of an issue here, I hope. The US, it is a massive, massive issue, but that's actually what got me into trading was that crippling student debt. Prop firms were actually the thing that got me, out of that.
It's an incredible journey as well. If anyone hasn't checked that out, we would go into it now, but I'll save some good time.
Story. But again, everyone here has got. We always go back to everyone's journey is very, very similar. Like you might not have 130,000 of US college debt, but you'll have maybe some form of debt, or maybe you're okay, but a close one or a loved one or a family member needs a bit of additional help from you for whatever reason. Everyone's got that reason why they need to kind of break out of or make a bit of extra side income maybe, or extra cash, and eventually a full-time income that's large enough that you don't need to do anything else. But these success stories like yourself, Ben, just shows everyone in this room, and you see them all the time online, and sometimes online it's difficult because everyone posts their wins, no one posts their losses. And we all know that that's not true. You can't have win with no losses. So don't get beaten up when you have a bad month, or when you blow an account, or when you're on just a bad streak, because everyone's going to go through it. You just got to stick to it, be disciplined. Make sure you put the work in, make sure you're managing your risk, make sure you've got a trading plan that you stick to, and eventually you will get your edge, and you will turn into a success story just like Ben here, where you can break out of whatever debt that you're in, or whatever goal that you're trying to achieve. Maybe it's a new car, or you just want to move out, or just change your circumstance and the group of friends that you surround yourself, and whatever your goal is, just don't rush it. I think that's my biggest piece of advice, is not to rush. Because if you rush it and you make a mistake, and you rush it and you make a mistake, you're just going to put yourself a step back, another step back, another step back. If you take your time over 6 months, you'll probably find yourself a step ahead, as opposed to rushing it month in, month out.
Definitely.
I would say, even to give more insight there, I actually talked about it earlier, building a business takes years. Again, looking at trading as a business, it is going to take years to build. I was probably in the prop space for like 13 months before my payouts actually surpassed what I was paying in challenges, right? I had a few small payouts, and then obviously the fees that come with challenges. They were always offsetting each other for realistically like my first year in the prop space. So even that, using the prop space, it took me almost 2 years to get to that point that, hey, sweet, I'm up 6 figures from this business.
I love that. One thing I've noted from today's, just all the speakers and generally in life, is that you have to treat everything like a professional, in the sense that even if you're a retail trader, whatever it may be, is that whether you want to host events, whether you want to run a prop firm, whether you want to be a trader, whether you want to, anything, whatever it may be, even if you're just a speaker, for example, or you want to learn fundamentals, you always have to be a professional. You have to give the time that is necessary. If let's say this starts at X time, everyone needs to be there X time. If you need to learn about fundamentals, you can't push it off. You have to give the time necessary. Even if it takes, as Joe mentioned earlier, it's like 6 months, a year, 2, 3 years. I think the misconception is that, something like fundamentals, I could pick that up quite quickly, just read a few things. But if you want to learn it in depth, you have to treat it like a professional. And that's one thing I've noted from everyone who spoke on stage today, including yourselves obviously as well, is the professional mindset of doing what is necessary. You know, like with the infrastructure, or whether it's the prop firms, and making that transition and sticking at it and learning those lessons. I think it's always necessary to be able to do that. Is that something that you've always sort of had that mindset towards these endeavors? So whether it be trading, or if you had to learn that mindset, what was that process like? How did you pick that up?
At some point, you have to be tired of losing, right? That's what it came to. Same reason of like why I picked up trading. I was like, I'm terrified to be in debt for 40 years. At some point, you have to decide to make a change, right? If you don't change anything, nothing changes. The results won't be any different. I think you just have to be tired of losing or tired of whatever situation you're in currently, because nobody can make the decision for you. But like you said, I had to learn it. I did not come in with that approach. I wish I did, but hopefully all of you, if you're in that beginning stage, you can change the approach earlier than I ever did.
It's also, you have to take it serious. Sometimes I think some of you, not anyone in particular, but just in general, the amount of people that don't take it seriously, how good of an opportunity what they've got in front of them is. If you remove prop firms, your alternative is live accounts, live trading with your own money, which is a fantastic way to trade, and there's wildly successful traders that do this. But you have to put up all of that risk. You have to deposit 10,000 that you've saved up from your hard-earned money. If you have a bad day and you lose 1,000, that's your £1,000 gone. You have another bad day, that's another £1,000 gone. You have a bad week and you've lost 5,000, that's £5,000 of your £10,000 account. Now you've got to double that account just to get back to break even. To try and make 130,000 like Ben's made from a 5 or a 10,000 deposit is extremely difficult, almost by luck to turn a 10K account to a 130K account. Whereas if you put that 10,000 over the course of a year and you take this opportunity seriously, where a 100K account is going to cost you $500, that's it, fixed, done. It's a fee, it's gone, you've got no uncapped risk, you can't lose more, you're not going to I'm not going to call you up and say you've just lost 10 grand on your account, please send me 9,000. It's your fee, once that's gone, that's gone. So you have to look at it like you've got a capped fixed downside and an uncapped upside. So the opportunity that you have here for $500, take it seriously. Don't blow these $500 because it is only $500 as opposed to your $10,000 live account. Still look at that, still almost have like a live capital bank account. If you're just trading prop and you look at that like my 5,000 is my fees for a year, for instance, and it will pain you more seeing that 5,000 get to 1,000. And you'll start to notice how much you're churning through evaluations. And chances are it's because you're not taking it seriously. You're, like Dan Chung said, 500 quid's 500 quid, I've got another 500 quid. But if you take your time and take it seriously and realize the opportunity for $500 cap risk, take this seriously for 2 months, 3 months, I can pass this. I've then got an account with uncapped potential. That opportunity there's not many industries that will offer people like yourselves that can put their all into it, take it seriously to be able to make the returns that can change your lives and set you on a different path or set you up to create a business that your passion is, for instance. So yeah, sometimes one piece of advice is take your time, take it seriously, and just understand and recognize the opportunity that you do have. If you take it for granted, you might be half-assed about it, you're going to get half-assed results.
Yeah, definitely. There's one thing that Ben spoke on the podcast, which was, I think, quite enlightening in terms of he would flip these accounts and every single time the mindset was like, just a bit more and I'll pay. It was like, this can cover the debt, but a bit more, then I'll have something to trade after I pay the debt off. And I think that's in terms of like trading the personal accounts, that's probably a lot of the mindset that holds them back as well, is that with the firms though, you pay the 500, you get your payout, you still have the 100K account.
That's
right?
a great point. You said, I watched your interview, right? On a live account, you've got 10,000. Let's say you've made it into 15,000 now. You're probably in this mindset of this 15,000 can now be 20, this 20 can now be 25, and you don't actually pay yourself. It's an unrealized gain in an account that you haven't physically taken. And if you do take it, you're back to square one, straight onto all your cold hard cash that you've saved up however long. Whereas prop firms, every 2 weeks you can get paid, you're back to square one. On a 100K account, you've got another 10,000 of virtual drawdown. you're going to constantly get paid and get rewarded. You're forced to pay yourself. So you can't flip account from, like you did, from whatever it was up to 100 and then back down, and you've not actually paid yourself. Whereas on a prop account, you would have paid yourself, 4 times over 2 months, for instance, every 2 weeks, cash, and that's a big difference. I mean, it's probably worth you commenting on that, as that's your personal experience, but I'm sure it will relate to everyone.
Yep. Again, just when I started taking prop firms, first of all, serious, and like budgeting my payouts. I set my payouts against whatever I was spending on prop firms. I had account turnover. I never kept one funding account the entire time. Account turnover throughout this journey, but I was setting off whatever I was paying in challenge fees. Okay, how much of my payout am I willing to risk to obviously try more accounts? Because I traded with multiple firms. Alpha Capital Group was just the one I did best with. But yeah, overall, right, treat it as a business. That includes those fees. Again, you have to respect those fees as it's out of the bottom line of your business. So that, again, made me respect it a bit more, because I was looking at my P&L for my business at the month. Oh, my fees are cutting into my income, right? So just respecting it as part of your income or net loss builds that respect.
And if you look at it as well like a business, month one, you're not going to try and make £1 million in business the first month or $100,000 profit in the first month. It's the same with your prop account. Don't try and go for the world in the first month when you get this account, because chances are you'll probably find yourself unstuck and make the wrong decision and rush it. If you know that 2% on 100,000 is going to get you $2,000, that might be 50%, it might be the same as what your current monthly is. That will make a difference. Just take the 2%, go slow. Take another 2%, go slow. Maybe the third month you can take 4%. And over time, you're getting paid every month. You're learning, you're staying in the market, you're making money from the account, as opposed to rushing it. Again, going back to taking it seriously. You get that account, you're half-assed, I want to make 50,000 on this account. You go all in and you punt a trade, and chances are you'll lose the account, and then you'll go back to stage one, and then you're putting yourself into that cycle. It doesn't have to be a vicious cycle unless you make it vicious for yourself. If you take it seriously, and sometimes it might take something to click. Some of you might have had a moment where it's gone and it's just clicked in your head, and you've gone, if I just stop doing this, then I'll stop putting myself back here, and then that might be the click that you need that just gets you profitable. And the traders that have been with Alpha Capital that have made the most money and have held the account for the longest aren't the ones that are making 30, 40,000 every random payouts. They'll pop up and they'll disappear most of the time for another 4 months maybe. The people that make the most money and have the accounts for the longest are the ones that just consistently take 5% from the account every month, 2-3% from the account every month. We have a couple of guys that have been doing it every month for over a year. It might be 2 or 3 accounts, but it's not one account every month and then no payouts for 6 months and then a big payout and then no payouts. Yeah. So just decide what bracket and what trader you want to be, and then focus on that end goal. Just take your time.
Love that. Oh, we'll open up questions to the audience. Any hands up if you have any questions? We have 1, 2 back there. Get your steps in, Josh.
Just going back to, I think it was Drew's point about market share. So a lot of these competitors of yours are making leading moves in terms of cutting out the trading days, reducing the max drawdown, etc. But the only one that hasn't been changed is the max allocation. Do you not feel that that would help with customer retention if the max allocation wasn't there or was increased?
That's a good question, because when it comes to, again, the question that I had first is, why should I trust in Alpha? And there's certain rules that when you tweak, make the model unsustainable and remove longevity from the model. And it's nothing to do with fees in versus people being paid out. What it really comes down to is how clean is your data set from your qualified analyst group. So you have stage 1 people, then you get to stage 2, and then you get your qualified analysts. And the cleaner that is, the easier it is for us to monetize that on the back end. The reason why we don't allow group trading is because if we have 500 traders trading the same thing from maybe an account manager or from an EA, if the account manager or the EA has a bad day, then we have a bad day times 500. And it's the same on the max allocation rule, the max capital allocation. If you're trading, so we allow up to 300,000 on the same strategy, so it'll give you $30,000 of maximum risk per one strategy. So we know we have a capped risk per one trader strategy when we're looking at our data set. If we start to increase that and uncap that, then all of a sudden it's not, we're doubling, tripling the risk per that specific strategy. So although yes, one day, maybe that could be increased to 400 per strategy or 600 of that, as others do. But again, that's not a particular one that we would rush to change just to get additional market share. I would much prefer to grow market share through offering a good service that traders gravitate to, that traders can trust, that traders can rely on, rather than trying to appeal to you by saying you can have an additional 200,000 in allocation, or a 1% increase in drawdown, or a 1% decrease in stage 1 profit target, which we could do those things and we could grow 30, 40, 50% or double in size in 2-3 months, but at what expense, So I do understand, and we get a lot of emails all the time, change this rule, change this, change that, which I get, but we're always very cautious on decisions that we make and what would the impact be. Always look at the worst case. Something like that, one day maybe, but for now, it will stay where it is. I get that. If you max allocation with us and you have 300,000 on one strategy, awesome. And then if you then go to FTMO and you have 400,000 there, great for you. We have no conflict of you trading at a secondary prop firm or a third prop. Also 300,000 is a lot to be trading with. You could split that between 3 accounts, have 3 100k accounts. You could diversify your risk and trade indices on one, FX on the other, and then whatever you want to do with the third one, however you want to diversify your risk across those 3. And then you could manage that. The one thing that prop firms has made difficult for traders, I think, is we've gone from looking at 1,000, 2,000, 3,000 deposits and risk on live capital to now prop firm accounts are 50, 100, 200. And the number has kind of become like it's not a real large number. It's almost like 300,000 isn't a lot, or $30,000 of risk isn't a lot. When if you just step back and take a look at really what account you've got on your hands and what risk you've got on your hands and the opportunity that account can bring you, it's more than enough, and if we start doubling that, again, now you've got to go from managing 30,000 of risk to 60,000 of risk. And the mindset of traders change from what you're used to managing. If you're used to trading $50,000 accounts with 2,500 in maximum risk in a day to now it's a $200,000 account, you're used to losing 500 or 1,000 a trade, and now you're losing 2, 3, 4,000 a trade. That mindset shift in the difference in the dollar amount that you're losing a day can have an impact on your trading, have an impact on your decision making. So I've kind of gone way beyond the question that you asked, but you could have stopped me there, Riz. You get the point. So trade with other props, max allocate us, awesome, congratulations. Mm-hmm. I do get your point, but we'll,
I think we've got one more question there.
Yeah, right. Just a general question, really. You guys obviously manage your own prop firm now, so kind of the ins and outs of how they run and just inside information yourself. If you was going to look for a prop firm yourself to invest in with your hard-earned cash, etc., what things now, with that knowledge that you have, would you look for that we can look for to secure our investment?
It goes back to the infrastructure, the experience of the owners, the background of the owners who are running the ship, but the infrastructure is also just as important, because the infrastructure is what supports the ship. So again, if we're relying on a third-party broker, a third-party tech provider, a third-party there's so many moving parts that I can't physically control what happens. If Purple Trading have an issue, that directly affects me, that then directly affects you. and I can't control what happens at Purple Trading because I don't own the business. So looking at the amount of third parties and moving parts is important, as I'm sure probably everyone in this room has probably been caught up recently in the MT5, loss of multiple, 80-90% of the market recently lost. Infrastructure is just super important. So look at that. Look at the owners, the experience of the firms, who's running it. Do you like the firm? Do you like the people that are around it? Do you like the community that supports it? I'd say those three things are probably the main things to look at.
I could say as a consumer too, I mean, the reason why I came back to Alpha Capital was the payout proof section of the Discord, right? There's a reason why we have the users in particular post it themselves. It's not a bot from the company. And if you guys follow Alpha Capital Group on Instagram, I started doing those videos because I was like, hey, as a consumer, that's all I ever wanted to see was the user saying how fast they got paid out, how much they got paid out, and if their experience was good or bad. That's why I went to George and Alex, and I started out part-time doing content with them with Pep, was because I was like, hey, I think you guys should be broadcasting this. That's why I liked Alpha Capital Group, because of the users themselves posting their payouts and saying it. And that's why I was like, hey, you guys cool if I post that on Instagram once a week? And it turned into a way bigger role here now.
No, and I'll say as well, just to finish up before we get Planty on stage, is like Alpha Capital Group's here, they're in front of you. Their owners are in front of you, answering your questions as well. And I think one thing that to note as well, the reluctance to make big changes it's a big thing. If you're very quick and open to making these changes on such a fragile thing that needs looking at and investigation and time, that's another big issue to look out for as well. But Ben, it's been an absolute pleasure. I know we didn't get to talk too much on futures. I apologize, that's my fault.
That's true.
But Planty, welcome to the stage. Ben, thank you. A big round of applause. Pleasure.
Good?
How are we doing?
Very well, sir.
Yes.
Planty, welcome. We haven't had a chance to do a podcast yet.
I've managed to avoid you so far.
That's it. But what's it been like? I know obviously you've got a lot of experience behind you. I've been enjoying Pips and Pints. You've been inviting a lot of people from your network and discussing as well.
Yeah.
What's it like though to see the progression of the industry overall?
Well, it's incredible, really, because when I first got to meet the guys and we were discussing me coming on board, it was like, I'm a fossil dinosaur, being in the industry for 35 years, and they're going, what's it like? So, well, my first experience of this kind of world was in between jobs, coming down to interview with UBS to secure a job. I'd got a flip phone Motorola, I've got a position on Wall Street, no stop loss because I've done the due dil. Everyone says, they've talked about it, there's not a speech in sight, there's not a thing going, and my phone's going off like a hot potato, and every time I try and answer it, it's no network, can't get there. So I got to London, 20 missed calls, it's City Index going, you owe us X amount of money, and that's 40% of my money gone, because, a bit of bad luck, but not doing the thing that you all should be doing, stop losses, blah, blah, but there was no smartphones, there's no info. The opportunity you have today with not having to put your own money up, having the control over it, all the technicals. I mean, well, we talk about here the 90s, I'm a nerd because I'm into technical analysis, and, everyone's talking about fundamentals and pure stuff. Now it's the complete opposite. I'm now the nerd for being into fundamentals. It was lovely to have Joe around to take the pressure off. But it is definitely the combination of the thing gives you the fullness of being a trader, and hopefully that's my role here, to try and develop people to bring the whole thing together. But it's a million miles from when I started. The opportunity you've got now with leverage is incredible.
Do you think that is kind of part of, not the problem, but like what people struggle with is the fact that they haven't experienced before the lack, the things that weren't available that they have now so readily available, and therefore they kind of in their mindset don't appreciate how lucky they are and how lucky the situation is at this time to be a trader.
Hugely, and I think I was just listening to the latter comments there. I think society in general, we've got interest rate issues. Everybody that's on the mortgage ladder, if you've managed to make it, you've all gone in, I'm the same, what can you maximum afford? And everyone's got this leverage, and they're going in full port all the time. And it's like you've got this beautiful advantage of being able to have big leverage and trade into it and scale in. You haven't got to go 100%. You need to leave yourself some room. The real traders. So I've been a market maker for over 30 years. if I went full port, I'd be straight in a room going, what the hell are you doing? And like, you've left no room. You knew that order, what we were going to do with that order. You've just killed it. And it's like, the whole point, and the reason why you see these order blocks, you talk about the accumulation, the manipulation, that is literally, you've got the worst seller or the worst buyer on the hook. You own that order, and the market makers are making sure they sell it at the top or buy it at the bottom, and this is what's being developed out there. So it is true, and I see all these people talk about this, and then people laugh that it's all being made up, and ICT is all rubbish. It all comes together. I've gone through so many different technical models over 30 years. Things repeat, they rhyme, but it's all valid, and it is an experience of what really goes on in the world.
In terms of the professional side, one thing I've had the lucky chance to do is interview a lot of professional traders more recently, and a large part of it seems to be like idea generation. And it's like a different kind of concept, rather than just analysis. It's like building an idea based and a thesis on what you're looking for in the market. How important is that as a trader, for that long-term career?
Well, hugely, because, and again, this is I had an economics kind of background, and I taught myself a lot of fundamentals, but I was lucky enough to go through the first stage of my career was at Sun Alliance on the buy side, and I found that too slow because I wanted to be a trader. But it gave me great economic background, understanding bond markets, and Joe has ended up in bond markets, and I can see why, because that gives you great fundamentals. But it allows you to look at the bigger picture, and you need to have that roadmap, and you get to feel how the data points all connect. And then it's not just a case of looking at the headlines, and we can talk about yesterday, but it's knowing what the nuts and bolts are below. And you can really set yourself up for... the way I look at markets from a technical point of view is that everything that you analyse, you're all actually right. It's a sentiment thing, and it's about spotting which one is actually in the ascendancy at any one point, and that is where the power comes, because you should have a second setup and a third setup ready to react to what the data is. So like non-farm payrolls came out yesterday. We talked about it on my chat, people coming in directly, and I said it was actually very confusing because the previous month was all over the place. Now when that came out, the shock to the top, we went into data at Alpha and said, look, there's an 80,000 miss there. If you look at the real numbers, then they're non-seasonally adjusted, there was no movement at all. I said that somehow has got to correct this month. The jolts came out, and that is for last month, that's not for this month, so it's understanding which data point is which. Half of that number came through. So I said, well, the setup has got to be that there's a revision down, but we can't go because these things are all over the place. But we know if it happens, we react. The market comes out, it's a beat to the upside, market immediately goes the wrong way, and that often happens, doesn't it, on the data points? But we're chatting in the Alpha community, and please come and join us. We're immediately going, that's the wrong print, and look, there's a 54 revision. It's all about the revisions, it's not about the headline, and we're off and running. And loads of people made money on gold, for instance, on that. So that is a plan. We were ready to react 2 days in advance.
Definitely. What would your sort of advice, there's traders with all different backgrounds, different ages, etc., but primarily using prop firms at this stage. What would be your advice with your experience to them?
In terms of what?
In terms of like gaining that consistency, that profitability, seeing progress in their journey.
Literally, take your time, scale into it. This is what I intimated straight away. Do not go into too much exposure. You need to be able to react, build your position. And that obviously helps with the psychology as well. I think one of the best slides today was Dan earlier with his scaling plan. When it's going wrong, scale it down. If you're happy to burn through loads of money, by all means. But if you're trying to create a track record, and I don't think we've mentioned that, Alpha Futures is being set up to, isn't it, Ben? There's a futures...
Yeah, Ben, we should have...
futures track record. So the whole point of the futures is that once you qualify, we can potentially start helping you use that as a track record. So
it's something we're looking to do it as well on Alpha Capital, but we've launched it at the moment on Alpha Futures. And Ben, we should have spoke about this earlier, but the difference, what the tracker account will be, and it goes beyond where we are, but this is stage one. So the tracker account is to track all of your qualified analyst accounts, and it will track, there's no P&L for you to make or lose from, it will just track the performance. If you've had 5 qualified accounts over the course of a year, what are you net over the course of a year? If that was one singular account with no drawdown or the same drawdowns but it reset every time, what would you be at net at the end of the year? Are you up, are you down? And then it will start to build a better holistic picture of what your track record is like as a trader, and how you would have performed over 6 months. And it might show you that yes, you've had payouts, but overall you're actually down, because yes, you're making payouts of 5,000-6,000, but you're blowing 30,000. New account blowing 20,000. New account makes 6,000 blow. So it's not something that we want to show people to then discourage them, but we want to show you a new way of looking at how you're trading and treating these accounts, so that, again, you can get a feel of the opportunity and the scale of what it is that you are actually trading on. Look at it from a different point of view, whereby you can look at it in a sense of how much you actually are losing over the course of a year, when you look at it as a whole picture. Because once you close an account, you probably forget about it completely, which isn't always a bad thing. But I think to look at it,
absolutely,
record, and track every trade that you've ever taken, journal it.
So lots of you have talked about owning the trades, and I alluded to it a minute ago, that if you're on a trading desk and you're suddenly going all in and you've not discussed it and you've not got a plan, the shepherd's crook comes out and you've got a lot of explaining to do, because you're messing up the whole P&L for the year for someone else, or you're taking up capital. So you've got to make sure your fundamentals are right, the reason to take that trade. And often you're not going to get that with a first shot. You might have done your analysis and you go for it, but then you've got nowhere to go with it. And as I was saying, particularly if you're doing indices, and as Drew said, know what drives the stocks. If I've got an order in one of the biggest stocks, the Nvidia, and it's 25% of the index, I'm going to have an effect. And just like we're saying, we might actually see something positive for the markets. The breadth will come, but the market will probably go down because they're lower weighted stocks. You've got to be aware of that, and rather than panicking out, you're buying into that natural consolidation, et cetera, et cetera. So again, you can only do that by waiting and playing and having 2 or 3 signals and build it in. Now, unfortunately, you threw me into risk reviews, didn't you?
I did, yeah.
So you got the opportunity to come and chat to me if you want, and we'll go through if you're having any problems, and also successes. But a lot of the
share as well, because we advertise it. We don't blow it up everywhere because we haven't got a whole team for it. But if you have failed 2 assessments, we offer, and we've done this for 2.5 years, we offer you a free risk review. And what it really is a 30 to an hour long call. It's not to teach you trading strategies, it's not to change what you're doing, it's to sit down and go, right, these are your 2 assessments. Planty now will sit down and take a look at them, take time out of his day to say, if you didn't do this, you're over risking here, you shouldn't have done, like, this is, what are you doing here, why are you doing this kind of thing? And it will help you just, sometime an outsider's perspective, looking in at what you think is correct. Maybe you've got the blinkers on and you're blind to an over-leveraging or a rushed or a revenge trade, and someone else looking at it, highlighting it.
I'm just chatting to people. I've identified with some people that they themselves know when they trade best. So there's one guy, he's in entries and he's over-trading around it. He said, but the ones that I really mean, I'm brilliant at getting out of them. Like 80% of the time, I get it, I'm totally nailing the top or whatever. I said, well, hopefully you're journaling, and I want you to sit there and maybe even have a demo account. And every time you feel that you think that is a top, if you'd have been in a position, mark it down, even if you're not there, because that is possibly telling you, and you're journaling, your actual proper strategy. So, and it's a way of getting around over trading as well, because that is the hardest thing. I've got people who are trying to ask me for ways of not trading on their mobile. I mean, to the extent that they've got to go and put a call in with their mates to stop them trading before they put a trade on. Some people have a burner phone. It's finding the thing that helps your own psychology to only trade when it's the right trade.
Some people have a burner phone for the wrong reasons, though.
I've got a feeling there's a few in here.
But that takes us to the Q&A with you guys. So any questions, please raise your hand. One over here, 2 over there. Oh, we got loads. There we go. Oh, for 1 second. Try again.
Hello?
There we go.
Hi. My name's James. Basically, from all the traders that you've seen, what are the common characteristics of the most successful traders that you've seen? Great question.
Honestly, it's the most disciplined traders. You'll never see a random, let's just use a $100,000 account. You'll never see a random trade where they've consistently lost 500, 500, 500, 500, then 3,000, 4,000. That would be a lack in discipline. That would be a point where they've thrown their risk management plan out the window, and they've tripled the risk because they want to pass the account. Honestly, the most successful traders aren't the ones, I don't define the most successful ones in Alpha Capital as the ones that have had the highest amount of payouts, although that is a measure for success, and one that, of course, would play a part, and one that we would look at. But if you've had the highest payout, but you've been with us for a year and a half, and you've made $100,000 once and then never again, it's hard to measure that as consistent success. The ones that we do look at differently are the ones that are month in, month out, 2, 3, 4, 5, 6% from the account every single month. Yes, they might have a month where they'll be down 2% and they won't take a withdrawal, but they haven't blown the account. Next month, they're taking a withdrawal. And the attributes that I think come to that is purely discipline. They stick to a risk management plan, and I could pull up their trading history and I can see it. I could pull up an old account and I can see the same patterns. I can pull up, they could have 5 accounts, I'll pull all 5 up and they'll be the same. It's because they're disciplined, they're sticking to a plan, because there could be one strategy. We could both trade the exact same strategy, take all the entries at the exact same price, and would have a different risk management plan. We'll manage our risk differently on how we get out, when we want to revenge trade, when we want to close it, scale into it, etc. And just from that, I could be profitable every single month and you could lose every single month. Just from that slight difference, even though we take the same entries on every trade. So that alone, I think, should indicate the importance and how risk management, but discipline, because you probably have a profitable strategy in your hands if you just invoke discipline and allow the risk to reward ratios of your strategy to actually play out over a period of time.
Yeah, I mean, that is a key thing with talking to people. They find a way to not let it play out. If you believe in it, you've got your staking right, and you've got the psychology to not care if you win or lose, then you can let that play out. And just for instance, this happens in the real world as well. Everyone talks about their celebrated wins and losses. I've worked with tons of traders over the years, and it's consistent day in, day out. They call it jobbing. It's the little compounding. Don't think you've got to have the biggest 10%, 5% trade every week. Yeah. That happens 6 to 12 times a year in real life. You've got an opportunity per year to have picked a strategy and you built it up and waited for it. It's the day-to-day grind that gets you there.
No, definitely. I'll just add on very quickly whilst we get the next question ready, is accepting a loss. From the podcast, I've seen that the majority of traders who do well is that they just accept losses. And all I'll say is that with trading, the only thing guaranteed is losing. It's the only thing guaranteed. So as long as you accept that from day one, that should help you to then start to accept them, overcome them in terms of the emotions and everything. Yeah.
So the market's always right, and it will humble you so quick the moment you try to throw it out and chuck 50 lots on gold, which, trust me, I've seen way too many times. It never pans out. And we don't but we don't have max lot caps in place to restrict you all. It genuinely is there to help you. Like the leverage, again, if you start punting 80 lots around on gold, yes, you might think that, I could have a 4 pip stop loss and I can swing 80 lots on gold here. But
it's a 3 pip spread before you start it.
Yeah,
you're offside.
Yeah, because you'll be getting, level 3, level 4 market depth. It's, just don't do those size, don't gamble it. Just understand that a loss is a loss. Let the risk to reward play out.
But again, we got rid of martingale, didn't we? The industry did, we did. And people forget that the best way of managing the capital is to effectively martingale when you're winning. You leverage up winnings. That's how the people really compound.
Winners.
You keep the stop loss, you keep the strategy when you're losing until that turns.
Yeah.
And you can even intraday scale winning positions, and that's why people pass in a day when they do it properly. So.
We've got a question over here on this side of the room now.
Yeah, my name's Oman. Thanks for having us here.
He didn't wear a suit, by the way.
Didn't wear a suit?
He didn't wear a suit, yeah.
Yeah, I didn't get the memo. I didn't get the memo.
Oh, right.
I'm sorry.
That's all right.
I can't actually see.
I know, I can't see either.
It's okay. That's a good thing. What is the end goal of Alpha Capital? What is the end goal of Alpha Capital?
The end goal. What we're building here is an ecosystem for traders, and we've ventured into futures with my good friend Ben Shafi to expand the product offering. ACG Markets, again, is a regulated broker. We're expanding licenses on there, and the reason for that, they all interlink. Every one of you in here will be able to, if you was interested, to use each one of those services. Alpha Trader, our own trading platform, is in development at the moment with TradingView charts, TradingView execution panels. We've got really cool designs on the front end to add in risk parameters that you can set for yourself that will enforce you to, almost like a trade manager, but it will be you can turn it off or turn it on, it's up to you, it's not something that will force on you, but it's something that's there built into the trading platform to help you manage risk, to stick to your risk to reward. And the idea is, again, to grow beyond just Alpha Capital, the FX prop, and really genuinely build Alpha Capital Group, which is a group of products and services to service the trading community. And every single one of those is designed with a benefit to you all. And like I said earlier, it's a win-win situation. If I can provide you guys a product and service that is beneficial for you guys, that you like, in return I grow a business, and in return you have a product and service that you can utilize, enjoy, in this instance earn from. Again, we'll take our time, we won't cut corners, we'll focus on infrastructure on each project. So if someone beats us to the punch on one of them, good luck to them, but we'll just stick to our lane, stick to our focus, and continue to build out the group.
And no hubris here, I'm available 24/7 for fundamental analysis at least, and how it sits with the technicals. People are picking up on that, and as Joe said, there's very few people look at it like this. It's the new world of putting technicals and fundamentals together. Just come and ask questions, I will get back to you, and there's probably a host of history on there that you can look at anyway. Yeah. And it's a product that I think we're ahead of the game on, aren't we, really?
Definitely. Yes. No, definitely. Well, big round of applause to our panel. And if the team wants to get ready, we're going to do the iPad. We're going to get the whatever is necessary. So the iPad. No, appreciate it. We try. We do. So the iPad. Okay, who wants an iPad? Who wants one? Really? No, but who really wants one? Who actually wants one? No, so honestly, who? Yeah? No one's, everyone stood still except for this guy here. There you go. You really want something, you have to take action. Yeah? You want to get into that trade, you have to get into that trade. Well done, man.
He was trying to figure out a way to do it, and he just said...
That was way faster than I thought, though. But look at you all, stood still, hands up in the air. If you wanted it, you front row motherfuckers could have just walked up and got it. Yeah? But no, I really appreciate you. The night is not over. The football will be on the TV in less than an hour. I know you're happy, yeah?
Come on, England!
But it's time for the Casino Royale of the night. So we've got, obviously, roulette, we've got blackjack, we have poker tables as well. And there will be refreshments outside.
Questions as well?
Yes, there's going to be questions for some giveaways of Alpha accounts, of course. We can't do that, yeah, of course. So Alpha accounts can be won outside. Is it outside? Is it in the foyer? Who's there? The team's not here right now? I think it's outside there, yeah. And it's time to network. So obviously appreciate everyone for being here. Appreciate Alpha for putting this event on in the first place. And a big thank you all.